Hello and welcome to today's video. The subject is S&P and the noticeable improvements we had seen in its market breadth. So let me prepare you for the upcoming trading session. Don't forget that the daily analysis on my site form the basis, so make sure you are subscribed and notified whenever a new post goes up. Twitter and Telegram serve the purposes of two-way communication and timely notifications. So let's move into stocks. Just like what we saw Friday was the period of consolidation giving way to sharp appreciation in the S&P 500, which is similar to what volatility does when it comes to low and high periods thereof. Friday's steep run was caused by the misguided notion of recession having been avoided, that maybe even no landing had been engineered, and the Fed can really pause now. We are seeing bears capitulating and still them being squeezed, which is of course what prevents stocks from declining more so than they had done, for instance, Friday pre-market. Note also the more cautious performance of bonds and real assets Friday, which did not participate to such a great extent in the S&P 500 risk-on run. Here we see the daily chart. 4455 had been indeed comfortably overcome, as I have told you in Friday's video. I hope you had seen it. If not, just subscribe to my channel so that you are notified of every upcoming video update. The intraday low had been reached almost full 20 points above what I saw as the target level to easily overcome by the close. And I'm not looking for that 4455 level to be broken to the downside right when the markets open next. It's that the market breadth had been that good sectorally, and tech, communications and discretionaries did so well Friday, while cyclicals, including chiefly financials, had not been staying too way behind, and industrials, materials with energy did fine, and the weakest among the biggest sectors, healthcare, is not likely to stumble right next, but it's the weakest one of them all among the biggest ones. When it comes to market breadth, we see that no top had been made. There is no sign of major exhaustion. The RSP is still improving, tech market breadth is improving, value cyclicals, they are all improving. It's still going good for the buyers, and of course Friday's run got some extra support from quarter end window dressing, meaning you gotta show some activity and buy into the best performing sectors, which helps partially explain why tech did so well Friday as well. You had seen charts like Apple or Meta that haven't met any kind of my conditions communicated in prior videos for a corrective move commencing. Likewise, the pure market breadth indicators of new highs, new lows had been performing really well Friday, and in my view they are outgunning the advanced decline line message, which is somewhat more cautious. So let's move to gold and silver right next. We got that Friday upswing, which was helped mightily by retreating yields in quality depth instruments, which facilitated also US dollar decline. We see some cautious but good daily upswing. Volume is somehow lagging, and for all the good daily turn, I'm not yet calling the end of this correction. This is not yet the turn. We are likely to be basing in metals somewhat stale. And as said at the introductory part of this video, this is part of the more cautious performance among real assets. Perfectly mirrored as well in crude oil and in copper. You see that the red metal is not leading other commodities even on a daily basis. So take it as a good reprieve. Otherwise the sky has not yet cleared totally, but we are still continuing in a largely risk-on fashion. I'm pretty sure you are familiar with my daily analysis. If not, visit my site and subscribe for free. The same goes for my Twitter feed and Telegram channel. Make sure to take advantage of both and comment, ask whatever you desire. Side terms apply. Beware of impersonators. Make sure that you are familiar with my journey to trading, financial world and beyond, really rich background. And some obligatory disclaimer to top it off. If you are watching this brief presentation on Saturday, then have a nice rest of the day and enjoy your Sunday. Those Sunday viewers, have a fine rest of the weekend and talk soon again.